Good morning. We will pay attention to manufacturing today. We have to complete the manufacturing statement and we will pay attention to the calculations. The bags are sold at 100 Rand each. The cost to produce a bag at the end of the previous year was 45 Rand per bag. We will first look at the calculation for raw materials. So the opening balance of raw materials was 45,000. We purchased raw materials during the year. We returned raw materials, so it means that reduced the purchases and we will deduct the 24 Rand. Any expenses that you pay from the time that you buy inventory until it's delivered to your premises will form part of the cost price of the inventory, so this carriage on raw materials will be added. If there was import duties or shipping fees, you will also add that amount. So I will use my opening balance plus all the information about raw materials purchased, and I will deduct the raw materials that's left over at the end of the year because we didn't use this raw material, so it can't form part of the cost of finished goods in the manufacturing statement. In the manufacturing statement, we will indicate that direct material and direct labor forms part of direct cost. Direct cost means that you can't produce anything without material and without labor. So those are the two essential products to be able to produce anything. So I will take my opening balance plus the purchases, less purchases returns, plus any expenses to get it to my property, minus the closing inventory, and that will give me the cost of raw materials. We will pay attention to direct labor. Direct labor is the cost of the people actually producing the article. So they sit with the machines and they make the things. Indirect labor that will be classified as overheads is expenses that is paid to the cleaner of the factory or the manager that must see that everything happens in the factory at the right time. So that will not be classified as direct labor. The total salaries and wages for the year was 252,000, and that is the gross salaries. So if I look at my salaries journal, I will have a column for gross salaries, 252,000. Then we have deductions for contributions by the employers and the employees. UIF must be 1% of the total gross salary, so that will give me 2,520 Rand. Pension fund is 5% of the gross salaries, and that will give me 12,600 Rand. So the net salary is the amount that the employee will take home, and that is the amount that he can spend after all the deductions were made. The gross salary is the expense for the business to employ the people. If we take the gross salary less the expenses, the net salary is 236,880. So that is what he will take home. That is the owner's money that he can put into his pocket. Okay, then they say the employer contributes the same amount to UIF. Contributions will be 2,520, and pension fund contributions will be 12,600. These contributions of the employer is also expenses for the business to employ the people. So it means if I want to show in the manufacturing statement what is the cost of my direct labor, I will add the gross salary plus the contributions of the owner to employ these people. The total amount is the expense for the business. Okay, then they say 50% of the salaries and wages to staff members who are paid for directly being involved in the production process. 20% is indirect labor, so that will be part of your overheads, and 30% will go to the income statement because that is paid out to people that's not involved in the factory. In the production cost statement, we will add the direct wages, gross salary, plus the contributions, and then 50% of the total amount will be the direct labor. Then I will add up my direct labor and direct raw materials to get the total direct costs. We will now pay attention to the total cost that it will for production. The overheads are given to us, so I add the direct costs plus the overheads, and that will give me the total cost. We have to complete the note for factory overheads, so we will pay attention to overheads now. The indirect labor is this total amount that we calculated for direct labor times 20%, because they said only 20% is involved with the indirect expenses. For consumable stores, we have to look at the opening balance plus the purchases less the closing balance. Opening balance of consumables is 2,500, so we use that in the current year. Consumables that we purchased in the current year, and that is 28,750, less the consumables that's left over at the end of the year. That will give us the total expense for consumable stores. These costs are shared in the ratio 5:3:2. That means that 50% of the total expense will be part of factory expenses and overheads. The opening balance plus the purchases less the consumables at the end of the year, calculate 50%, and 14,000 was used as factory overheads. Rent expense that was already paid was 117,000. In the adjustments, they say the rent amounts to 9,000 Rand a month. So if we want to know what is the total amount for rent for the year, we will take the 9,000 and multiply it with 12, and that gives me 108,000. So although we only paid 117,000, it means that we already paid an amount in advance. You can only show the expense for the current year. The prepaid expense will be showed in the following financial year, and this 108,000 will then also be divided by 50%. So the rent for the year is 108 times 50 will give me 54,000. The sundry expenses are not provided. We will calculate that with a balancing figure. Depreciation, only the depreciation on machinery will form part of the overheads. The other depreciation on office equipment in vehicles will be taken to the income statement. Then the water and electricity that was paid during the year was 48,000. They say at the end of the year, 4,000 will only be paid at the beginning of the next year. So it means this 48,000 is not my total expense for the year. My total expense will be 52,000. So although we haven't paid the 4,000, we will have to show the expense as 52,000 and take 50% of that amount as overheads. I will show the depreciation only on the machinery, and on the 52,000 I will show that 26,000 is for factory overheads. The factory overheads were given to me, so I know that this total is 201424. So if I subtract all the other figures that I could calculate, I will work out by balancing what is the sundry expenses. The work in progress at the beginning of the year will be added because that expenses paid in the previous year forms part of the total costs to produce goods in the current year. The work in progress at the end of the year will be deducted because we paid these expenses this year, but the products are not completed. It cannot form part of the expense in the production cost statement for the current year. Work in progress is added to determine what was the total cost of goods produced during the year, and the work in progress at the end of year is deducted to give us the total cost of finished goods at the end of the year. The cost is 50 Rand. The previous year the cost was 45 Rand. So they want to know what is the reason why the cost to produce these bags increased with 5 Rand. The cost of raw materials went up. Labor costs could increase as a result of salary increases to keep up with inflation. The factory overheads increased because petrol increases, so all the things that you buy will increase. So any of the reasons that you can think of why the cost to produce articles will increase.